Carson, thank you so much for joining us again. I just had 4 quick questions to go through. Just wanted to ask you, we're going to ask on what are the new loan limits, what are the current interest rates, and how does that compare to jumbo loans? And then, what else do we see for the rest of the year? So just kind of take us through that.
Thanks for having me on again, Robert. I really appreciate it. Yeah, exciting news. In the beginning of the year, loan limits are announced. Sometimes they change, sometimes they don't change. Given that over the last few years, we've certainly seen home prices rise nationwide, in some areas, significantly rise. The Fannie Mae and Freddie Mac, the agencies, will reevaluate where they want the loan limit to be before the loan becomes a jumbo loan, right? And the big key difference there is when it's not a jumbo, when it's under the loan limit, there's more options for financing, for mortgages, right? You can put less money down. Historically, the rates have been better, but that's not always the case. In other words, it's easier to qualify for a non-jumbo loan. With a jumbo loan, you need to put more money down. Your debt to income ratio, that number's lower, meaning it's harder to qualify for more home in the jumbo area. So combined with a bigger down payment, needing better credit scores, stricter in how much home you can afford, and then probably the biggest one is how much you need left over, what we call reserves, how much money you need left over after you close on the home. With a conforming loan, a non-jumbo loan, you don't need much in the way of extra money in reserves. But with the jumbo loan, they typically want like 12 months or 18 months of the payment. And so you need to not only have a bigger down payment, but also have money left over in reserves, a cushion, if you will. So the exciting news was that the loan limit was increased from about $647,000 this past year up to $715,000.
Nice.
So with as little as 5% down, for example, you can buy a $750,000, $775,000 home with minimum down, and it'd still be under the jumbo limit. So it's exciting to now have a $700,000 loan that you can still put minimum down, as an example.
Yeah, that's a big deal. That's amazing. So what are rates at then for normal conventional loan?
A year ago, rates were in the mid twos, high twos, and today they're really in the high fives. And so, I mean, literally interest rates have doubled. And, that does have an effect on people's buying power. And so that's why we're seeing, in areas where there's less buyer activity because of the payment shock of what what your payment would be to purchase the same home now versus a year ago. But rates in general are in the high fives with really good credit, low sixes with, kind of marginal credit.
I know you said normally jumbos are higher, but that's not necessarily the case right now, right?
That's right, because jumbo, the credit requirements are so much stricter, it's looked at as a safer loan. The outlet is a little bit different, and we need Wall Street and private banks to come in and buy those jumbo loans. And when interest rates were in the threes, there wasn't an appetite for the jumbo loans. Well, when interest rates are in the fives and sixes, there's an appetite for those loans with big down payment secured by real estate. And so a long way of saying that rates are probably 1/4 to 0.5% better on a jumbo loan right now. If you have the big down payment, that's a nice option. Before, people would sometimes do a conforming loan and a second loan behind it to avoid jumbo. Well, if you've got the down payment, it probably makes more sense if you qualify to do the jumbo loan now.
Okay. So then what are you seeing for kind of the rest of the year?
So it's that ugly I word, that inflation word, the inflationary concerns right now, right? That you're hearing all over the headlines and the news and the finance channels. And the hope was that inflationary concerns, that inflation would come down. And there was some disappointing numbers in the last week or so that said, hey, inflation's not cooling off. And we had seen rates dip down about a month ago because we thought we had kind of tamed the inflation. We'd kind of cooled the rising costs. Numbers are still hovering around 8%, a little over 8%. And people feel that pain of their dollar not going as far, right? Things cost more. And as that happens, that means their dollar doesn't go as far. And so the government wants to get that under control. We want to make sure that prices stabilize out. And because they're still continuing to go up year over year. Looking at August last year versus August this year, that concern is still very real. And the Federal Reserve, the government will continue to do what they can by raising rates to cool the rising inflation, to cool the economy enough. And it's a dance, right? It's a balancing act of how do we cool it down enough so that they don't keep going up, but don't overcool it and we go into a recession. So that's the concern. So where do I think rates will go? I mean, at some point we'll get this in check. And I think we're seeing consumer habits start to change, right? I don't know about you, but for me, like I'm spending less money, right? And that behavior of spending less money will also tame the rising inflation. So eventually we'll see rates come down is what most of the experts predict. We don't know when. I saw a statistic from Fannie Mae that they're projecting that we could see rates dip back down into a 4.5% to 5% range next year. And that's really healthy. I mean, anything under 6, I've been in the business 20 years. I know you've been in the business a long time also. And, you know, you and I've seen interest rates in the 8% range, mortgage rates in the 8% range. And so 6 still sounds amazing.
Absolutely. Well, and I feel like even from the realtor side, we're seeing things normalize and prices have kind of stabilized and buyers are back, you know, and so we're seeing more showings, more offers, and not crazy like it was before. Mm-hmm. But I think with the run up of interest rates, and then it kind of normalizing, people were like, okay, this is what's happening. We also feel like a lot of people couldn't travel over the last couple of years in the summer. So they said, forget it, we're out of here. And now they're back and we're seeing the activity in it. So I think, and there's been enough research shown or enough people listening to different videos and stuff like this that just say like you're going after your forever home or your next season home. It's not always your forever interest rate, right? And so I think without question, the Central Texas real estate market, the activity is definitely picking up.
And I have concern about when rates do dip back down, there's going to be a rush to the market again. And I think we'll see, you know, some of that multiple offer competitive market situation where buyers are fighting over homes again. If the rates going up slowed it down, I think the rates going back down will speed it back up, right?
Yep, absolutely. Yeah, especially our area. We were talking about that in the office the other day. It's like, you know, we want the rates to go the other way, but when they do, it creates more demand too. And so the buyers who are in the market now kind of have a little bit more control because they don't have the competition and everything what that looks like.
Absolutely. Yeah. It's fun to see now where buyers are actually successfully negotiating for the seller to pay some of their closing costs and the seller to use money to buy their interest rate down. And so there's still a lot of creative things that you and I've talked about to help with that payment shock of what the payment is now at a higher rate. It's common right now for us, if the interest rates are 6%, for someone to use seller money to buy the rate down to 5%.
Well, and we even had, I think they were working with you too the other day. We had a VA buyer that came in buying 0 down. They got money off the house. They got a good amount of money off the house. And it was a contingency offer, meaning we're only going to buy your house if we sell our house, and we're just now putting it on the market. And we got them under contract and everything worked out. Like it was pretty amazing. So the buyers who are out right now are smiling from ear to ear. So
they are. They finally have more negotiating power and choices and options that they didn't have before, right?
That's right.
Thanks for having me. I appreciate it.
Thank you so much, Carson.